morning, everyone. Happy Wednesday. I'm your host, Marcus Stoker D. This is the metal markets on Topstep TV. Let's have a look at what the markets have for us. I am running some crude oil trades today, so I'll explain those in a minute. But first, let's have an overlook of the metals, what they've done. And let's start with gold on the weekly chart. Why not? All right, gold is in rollover. We have approximately 1 day till the expiry of this contract, so you can expect that either today or tomorrow this contract GCJ should be rolling into GCM, which is the June contract. Now, rollover can be a little bit of a weird time. Now, we do have headline risk that could be changing things. However, yesterday we had a pretty muted day when we compare how much gold usually moves. However, towards the end of the day after the end of electronic closing, we had some headline risk and gold pumped higher and crude oil massively went down. Now, I held a trade from, that was in crude oil, so that was from, let me just remember, 92.40, and I actually kept it. It was a very similar trade in my own personal account that I usually trade towards the end of the day only. And I kept that trade longer, but obviously because Topstep closes everything out about 10 minutes after the electronic close, I was not able to catch all of this. So I only caught, a small piece of it and then closed it. But yeah, so today we seem to be having 87 as a level that is causing some trouble. Now, gold in the same vein, they are very correlated still. It's a maybe not a perfect inverse correlation, but at the moment, let's have a look. At the moment, we are still sitting in a reasonably heavy negative correlation of around minus 0.7. So that's strong enough to warrant me looking at gold and crude oil and even equities, because at this time they are all super correlated. That introduces issues if you're going to trade multiple trades at the same time, like I do, because you have to be wary of exposure. But it also offers opportunities to maybe run some trades. This would be a little bit more advanced. So you would be, there's a way to do again, this word has gotten such a negative connotation in the prop world. There's a way to do a hedge between correlated assets which are from different asset classes, but something is forcing them to go into that negative or positive correlation. So with the negative correlation, you could take the stance that if you are going to be wrong on one thing, you could run the same direction on, like between gold and crude oil, for example. If you run the same trade in the same direction, just know that one of them is probably wrong, because that's how correlations work. So from the daily chart, I'm seeing a weaker reversal. Like this whole reversal here is pin bars all over the place. Now, gold is not a very good product for pin bar reversals. I think if you have an equity index and you get a pin bar reversal on the daily, especially if it's to the long side, that tends to be a pretty strong signal. But this is a commodities product, and it's a lot more, let's say, temperamental. So be careful of the patterns if you are somebody who does like to analyze the patterns a little bit deeper. And the pattern analysis that I like to do with candlesticks is reasonably deep. So it is in the Marcus Stoker's method, which is mine. Basically a very important piece of the analysis to make sure that you're not getting involved in lower odds reversals, right? Okay, so, but what do we have if we look at the structure of where this move came from? It's a pretty clean move, right? We had a drop, base, drop formation, and a pretty strong one at that. So I would classify the area around 5,000 to be an area of interest if we continue to go up and to push higher. We created an all-time high up at 46.30, let's say, roughly. And then as a result, we were not able to push through that. That created this supply, kind of a reactionary supply. And then this is actually the cleanest move down on the daily chart that we've seen in a while, right? So most of the others to the downside, they were a little bit sketchy and very quickly got chewed up. One thing that might put a wrench in the works is the fact that for gold, you have this rollover, and that can more often than not cause something called the gamma pinning environment. Why? Because you have something expiring today, right, or tomorrow or Friday, and there's a more pronounced hedging scene in and around rollover. So you don't want to aim for massive movement. Apart from headline risk, there's not really too much technical reason why in and around the rollover something would move massively. So that's definitely a difficulty on gold. On the 4-hour time frame, we can see that they're just pushing it pretty nicely. At the moment where this VWAP is printing, on the 4-hour chart, it looks pretty flat at the moment. That's not unusual for this time of day. All right, let's get into the intraday side of things. So what happened yesterday? Now I'm going to put the intraday levels, and there's a few of them. So what did Asia do? First and foremost, this is something I do every single day. What did Asia do? Well, Asia pushed up after that big move higher, and that's kind of where we continued up until about 2 a.m. when the metals typically like to reverse during the Asia session. So they typically like to reverse between 2 and 4 a.m. my time. I am in England, so I'm still in GMT, but that's probably going to be changing. Well, that is changing on Sunday because we're going into the end of daylight savings. And with that, the stream that you're watching now, if you're over in UK and EU, is going to then start at 11:30 a.m. rather than 10:30 a.m. But for those of you in the US, the time stays same because here we are kind of following, especially because I'm so close to the daytime broadcast. We are following the Chicago time. All right, so very interestingly, at 4,600 on gold, we do have this dual pin wall. What does that mean? Well, it means that there's an equal amount of puts and calls right there, and they're pretty thick. So I'm going to just speculate. It's not, an advice or anything like that. There's no financial advice here. So I'm just going to speculate that this level could act as a magnet, okay? Now, once we get there, if we do get there, outside of headline risk, I would not expect to see, some massive push continue through it, and I would expect to see that gamma pinning exhibited around 4,600. Having said that, gold is super, super volatile, so even the gamma pinning could cause you to be in a range of like 700 ticks. So that's not to say that there aren't opportunities, but when I was in chat yesterday, I saw a couple of people going, yeah, if gold goes down below, whatever it was, 43.60, we are going to have a massive rundown. So I just said, in chat, gamma pinning though, rollover and all that. And, most of the chat just completely ignored that. And yet, what we ended up with, so ignoring the post-close shenanigans, this was your entire day, right? This was the entirety of London and COMEX session. So a massive range aside, is this a trending market? It isn't, right? It's a range market. And that's exactly what I said yesterday on this stream too, that be careful of the pinning. Now, the pinning yesterday was around 4,400, so today we're a little bit higher than that. and I would expect a similar situation. So basically, maybe crawling back up to 4,600, and then just kind of maybe using parts of this London low to establish some sort of range, and maybe try a couple of setups based on that. When you have a range, it is always absolutely paramount to avoid the middles of the range. This was my big pain point for the first 7 years of my career, and if you're new here, I've been trading for almost 20 years. So I really struggled with the fact that I was either a mean reversion trader or I was looking for some kind of a sustained auction, almost like a momentum trade, but maybe with some pullbacks thrown in, because I don't like breakouts personally. And I like to hold my trades much longer than most people, right? So most of my trades have a duration of about 100 minutes, but you know, a few of them are actually held for like 6 to 8 hours, so I don't trade too much. But if I have a range day, I will absolutely trade more. Why? Because you don't have much available, so you have to go with the day sentiment. You have to make sure that you are not putting your projections onto what you want to happen, but rather staying objective and then reacting to what you have right now. You know, I can say that, yes, on the daily chart, we have a massive potential to go back up to 5,000. But the real question is, an intraday trader, can that happen now, today, when I'm trying to find something to make money from? And I would say anything's possible, right? ACH, as we say. However, given the fact that we are in the rollover, given the fact that we are seeing, you know, outside of the headlines flying everywhere, that gold does exhibit that slowness and range-bound behavior, I would say that it's lower probability unless Trump sort of blesses us with like another piece of news and gold goes flying. That's always a potential, right? So the whole trending thing is possible. So it's not impossible. It's just a little less probable. And trading is all about probabilities, which is why it kind of particularly annoys me when I see people who are like, oh yeah, I'm losing trades. Yeah, we lose trades. But over time, you have the expected value. So if you're focusing too much on any single trade, my mind immediately goes to, right, so you're putting a lot of weight on one single trade. That's interesting. Are you oversizing? It's like my only question. Now, outside of that, we do have the gamma flip that has moved today to 4,500. And we have the Tokyo low right underneath it. So in a case where we might see a slightly more expanded range, I would again think that, you know, this former range that the zone, so everything's a zone, the former range that we established yesterday, that's exactly where the Tokyo low was created. So, you know, it wouldn't be super odd for me to see a sell-off down to that, and then again to see some sort of a pullback. But again, that would be only dependent on headline risk and somebody saying something that will allow gold to actually drop that much during this odd rollover period, right? So be a little bit careful. Now, I've plotted the average ranges, which are statistical probabilities of how far this product has been moving over the last 10 to 14 days. I have my own proprietary ways of calculating these. It's not as simple as just going, hey, we're like, you know, doing the last 10 days divided by 10. So adding that all up and dividing by 10. It's not quite that simple. So I do have, you know, some weighting in there and, you know, a whole bunch of stuff that allows me to be a little bit more precise with projecting the size of the expected range. Now, these levels are not connected necessarily to any market structure. They're simple statistical ranges that will allow you to figure out whether you have a normal day, therefore these 2 points might act as a magnet, or whether you're maybe in an outlier day. A few days ago, I had a question on group coaching. I think it was Nicole who asked that, why didn't you take the ADR reversal? And on that day, we had gold that smashed through or one of the products that smashed through 1,600 through the ADR low before it reversed. That's not an ADR reversal. That's a market that is trying to decide what to do and has a potential for an outlier. it means expanded ranges, and in that situation, statistical averages are not going to help you. So you can use them as a twofold measure, where you're looking at them as a potential reversal, but if it's an outlier day, maybe just take in that information that you do have an expanded range and use other measures to figure out what your trade setup should be. It has to be a slightly different approach. And with that said, I don't think I have much else to say on gold. Obviously, this big move caused us to move vastly away from yesterday's value area, so they're all kind of sat in this particular little range here. Can we rotate all the way down? I mean, look, yes, anything's possible. But again, with the gamma pinning around the rollover, a little less probable. So I would say that this is more of a reprice. And then what I typically look for is newly formed distribution curves that I can lean on intraday. And then I will typically try to use the London lows or Asia lows, depends on where they're located, and any kind of relevant anchored big GEX levels, gamma exposure levels. Right, let's move on from gold. Let's have a look at silver, because I know that many people trade silver rather than copper. I like copper still. And my idea of copper longs eventually worked out yesterday, so that was nice. Let's have a look at silver. Now, silver, a lot more fluid, I would say. Still a massive range. But it's a lot more... It's a lot more of a trending market, right? Bit spiky, but it's nowhere near its own rollover. We have, quite a ways to go until that. So it's not really suffering from the same kind of gamma pinning environment. What was interesting, though, is that the anchored options levels for me came out pretty far away from these levels. The one that stood out was 75, and the Tokyo high was made just under that. Now, I did a double label here, but really this should go a little bit higher. However, I want to know where the Tokyo high was created as well. And Tokyo low is sitting again right above this previous range. So can we get down there? Yeah, maybe, but again, I would like to see what COMEX does. This time of the day is typically a little bit noisy. The probabilities either side are not that great because you don't really have a lot happening in metals until the LME starts and then COMEX. So really, in order for the market to start truly expressing its directional intent, we need to get closer to COMEX, and that's not happening for another sort of, let's say, an hour and 90 minutes or so. Yeah, more like an hour and 10 minutes, something like that. So I'm just going to see like where my bigger areas are. Another interesting thing is we have a bit of a chop zone down between 70 and 69 because we have two put walls. And then further up, really nothing until you get to 80. Another interesting thing is that the gamma flip today is nowhere near in the full options chain. It's so far out that, it didn't even come up as an intraday level. So that's a little bit odd. Usually you have the gamma flips somewhere near these, but the ATM options are not really telling me much in that regard, so the gamma flip is very, very far away. And that means we have to rely on some other techniques to, again, figure out where this market wants to go. So with that in mind, I'm going to have a look at where the value areas are. Now, silver does have its own COMEX value because London is going to be over, and I want you to have levels that are a bit sort of further than the session that's going to end effectively in about an hour. I don't take the overlap between I take the overlap, but I cut it off at the COMEX start, so I don't consider smushing both the players from COMEX and from overnight in Asia into one single profile, so I separate them out. It's just something that's worked for me pretty well. But the value high from COMEX yesterday was 70.25. That is the TPO value. And then the value low is sitting basically right around that 69 level. So roughly you're looking at these two put walls at 70 and 69 as your value area. Let's have a look at the daily chart just for a little bit of an overview. So you can see that silver much stronger than gold. Gold is just starting to turn around. Again, that's the function of that gamma fin wall. Yeah, so it might actually have a good chance of reaching 80 at some point this week. Wouldn't say today, but you never know. Anything can happen. Likewise, this could be just a little bear flag, so they could just smash it all the way down. That's definitely a possibility. We've had 3 days of attempted upside movement. Is this a true swing? I would say I would be rather, in this situation, I would probably rather be short up from like 87 than long from here, because I think this is turning into a bit of a bearish market here. Why do I say that? Because we have lower highs, new lower low, and that's all happening on a supermassive time frame on the daily chart. So that's not a great thing. All right, let's see if we can maybe move on to copper. So I'm just going to take that back to my 30-minute time frame, and then we're going to have a look at crude oil, the crazy bunny, and I'm pretty glad to have crude oil back. I'm going to talk about the trade that I took earlier, and then the one that I'm in on right now and the reasons why. All right, same thing, copper daily chart. Now copper has had some news about China's renewed interest in copper, so that's probably a little bit of macro driving the upside movement that we've seen over the last couple of days. Can this go higher? Yes, we have this clean area of a very nice drop with the supply up here, some single prints left behind, so really we need to tackle this single print area. If they can't really go confidently into it, I would then expect another reversal and this to continue into an accumulation phase if you're a fan of Wyckoff, to make sure that you're not getting ahead of yourself. So for now, dangerous area, because we do have a huge drop just ahead of the consolidation, and this could mean some intraday opportunities as well. But aside from that, so potential accumulation, potential phase one, as I like to call it. Nothing really much to say in that regard. Let's go into the intraday levels. Alright, Tokyo range on copper was fairly muted considering how much this product has been moving. So if we do get this increases the probability of a breakout, right? So you have a pretty small Asia range, and then you are effectively looking at the prices breaking out of that range, and that's much easier to do because it's a small range, right? So I don't want to get involved anywhere until we actually reach the edges of the Asia range, and that means I need to have a look at that 560 level. Now this 560 level keeps coming up, right? Every time I'm doing analysis, like 560 might change. It might change its name by the weight, but it's always there. And similarly, we do have 550 again, but today 550 is the gamma wall, and that's exactly where Tokyo, sorry, not gamma wall, gamma flip. So we're currently in a positive gamma environment technically. If we start to go underneath that and we are able to tackle the 550 level to the downside, that will probably signal some signs of a negative gamma stepping in. But again, if they pull it back over that, it goes back to positive gamma and then back to that mean reverting behavior. But until then, we are just stuck in the Asia range. When I look to the downside, that 520 level actually keeps coming up. I think I have it already on my chart. That was a weaker put level the other day. Now the question is it a weaker put wall today? Yeah, still weak, but still having some implied volatility anomalies, let's call them, without going too deep into the science of how to calculate it. And yeah, so if we drop, wouldn't be surprised to see copper touching 520 before any meaningful reversals. Now to the upside, we do have 590, so skipping over quite a few things here and then going all the way to 590. Now we did have 6 evens as an important level for a long time. Well, that still has quite a lot of, you know, open interest, but the implied volatility is a little bit odd up there. So 590 is coming out as a stronger probability level for any sort of reversal. However, for today, that is way outside of the statistical averages and way outside what copper normally does. So I wouldn't really consider 590 as something I want to focus on today. So the levels on copper to watch for me are 560, 550, and then let's see where we get to from there. The ADRs are plotted here. You can see them. So we have ADR low right around this previous day's Tokyo low. This Tokyo low, yeah, and then that quick reversal. So I sat in a drawdown here because I expected this to do the same thing and to just going to keep climbing. It didn't yesterday, but eventually I got my move, and it was probably one of the longer trades that I've held recently. Anyway, but yeah, 560, 550, ADR low, ADR high. So ADR high sitting up at 570, ADR low sitting around 537.50, let's say. Now, let's turn to crude oil, because I do like to overview my energies markets as well. I do trade energies on prop, but I don't really do much trading at all on my own account, unless it's a DAX setup, throughout the day, right? I've always found the end of day to be the highest probability, and for my own private account, I want to make sure that I'm getting involved in the highest probability trades. Now, what's happening here? We have a failed auction, so I plotted these IB high, IB low. My first trade was actually the failure of the auction, and that went to my 2R reasonably quickly. I was only in with 3 contracts. I was in with 2 initially and then added 1, and that's where $364 is coming from. Now, the behavior of crude oil during this time, especially when you have a reasonable sized initial balance, which we do, because at the moment initial balance is, let's say ballpark about 200 ticks, so $2 range. Whenever I look at what crude oil does in situations where the initial balance is pretty decent, it typically tries to go one way, then partially fails the auction, but it doesn't quite rotate all the way to the other side. And of course, anything can happen, right? But it's just statistically, it tends to stop the rotation. I think sometimes I've seen maybe by like 30% of the times they rotated all the way and through it. But we do have this 87 level that is kind of an implied volatility minimum range, similar to the average data range, except they use the implied volatility to figure that out. And if this market doesn't rotate to the other side of the initial balance after the failed auction failure, which we had right around just sub 89, the likelihood is that in the pre-market NYMEX, you get a further extension and a continuation in the direction of the first failed auction. So if it goes into a neutral day, that's fine, but really I would like to see it hold somewhere in the zone around 87 level before it begins to track higher. Because I was dealing with a whole bunch of stuff, I decided to just enter a trade. I'm using a very wide stop, right? This is not This is not an intraday trade. I'm not looking for accuracy here. I'm not looking for, nitpicking. I'm not expecting a range. I'm actually expecting some pullback through this big smash down that we had right after the close yesterday. The purple area in this situation is the London value area from obviously just a partial London session. That was narrowly missed. Now, when you combine that with a single print in this way, that's a pain point. So the single print edges typically get touched at some point, and we'll see whether this market can actually start to do something into the pre-market NYMEX, right? But I wasn't really looking for super accuracy. I was just like, yeah, let's just get a trade on to have something to stare on at the screen while I'm talking. So now I can kind of give it a little bit more attention and see what we want to do with it. But the hypothesis is the same, right? So I want to see it hold in and around this bottom zone of the initial balance. If it goes all the way down to rotate, that is exactly where my stop loss is. If I'm stopped out, hey, I'm stopped out, so what? But the hypothesis is still the same. So whenever you have the extension to the upside that happens first, they tend to struggle to actually take it much lower down. One thing that might put a wrench in the works is, of course, the headline risk. So let's have a look at the daily chart. I mean, it's all very spiky around this level. We do have a decently created demand area right at 85.30 roughly. That's where we spiked down to, straight to really sub 85. So we went down to 84.50, and that's where it turned around. So when I show you the daily chart, it becomes a little bit more obvious what I'm looking at, right? So if I take into account that this is the demand area that I'm focusing on, and that we already had a bounce, I would like to see that continue today, and we'll see how true that hypothesis is. If it doesn't happen, it doesn't happen. Headline risk, somebody opens their mouth, they're getting a deal with Iran, which I'll be honest, this trade is maybe a little bit on the side of a bias, that I'm being a bit mistrusting and going, really? So you think it's all going to be over? And, it's been proven over the last couple of days that half the things that are coming out from both sides really are not entirely true. So yeah, a little bit of a bias there that, technically, yes, we're bouncing from a demand, but I would also say that this whole excited move downwards was maybe a bit premature. So I might be wrong, we'll see, but sometimes you just have to take in the information and just be a little bit skeptical and just go, is that really true? All right, so the statistics around how deep this sort of a setup gets tested, typically it's around 50% of the demand, which is where I entered, right? But there are days that test all the way into 75%, and maybe a very small number of days that tested 99% of the initial balance before turning around. So again, my stop loss is way below that. If it breaks, it's fine. Because the hypothesis then is going to be completely invalid. And if that's the case, my next area of interest would probably be around 85 to make sure that, I still have contingency plans. Crude oil loves to do mean reversions on both sides, but I am more short-sighted normally than I am long-sighted on crude, for the simple reason that it has a heavy downside component. But with everything that's going on, again, I'm a little bit mistrusting that everything is like all nice and beautiful, and that we're going to see crude oil down at 70 in days. So I'm kind of thinking, really? So yeah, a bit of my own bias in here, and because of that, starting with a very, very small amount, had a super wide stop to give it enough room for shenanigans into the pre-market COMEX to happen, whilst I'm searching for my bigger daily outlook trade on an intraday level. And then we're going to see how far we get to, right? However, it's still within the day's range, because the 8-year high is all the way up at 95, if you would believe it. And even I was like, really? 95. And to the downside, the full extent of the average ranges falls down to 81. So we're still very far away from it. Anything can happen here. And we'll see which one wins out. We do have a gamma wall at 90. That was narrowly missed. That is also the London value low, so that's interesting. We do have the NYMEX value higher up at 91.41. There is something about the 92.50 level that most market participants have been finding pretty interesting, because if I go back, you see even after this massive smash, we tried to go higher than 92.50 and they just couldn't break it. And then the same thing happened yesterday. And that was kind of the hypothesis for my short trade yesterday. It just wasn't happening. It's like every time they get up there, because, you know, it's probably a nice, comfortable number. And that's where my target is. So we'll see how accurate that is. Or it could be a case that they did their business, they sold off, and they never see that again for quite some time. If we get some good news, right? So if we get some good stuff coming out and they're negotiating and whatever, then neither of this opinion of mine will matter, because they will just smash it all the way down. And then we'll have to create some new hypos with new levels tomorrow. And that's absolutely fine. But yeah, if we do get up there, I might take my profits if it allows me at 92.50. But really, for any further shorts, I would not be doing anything until we possibly get to 95. Of course, that can change. Why? Because, you know, if you get the day range filled, time of day rolling over, and we're still sitting around 92.50, and I'm going, well, you know, maybe we should try an auction fade of some sort or something, because I'm at that point looking for a product that is pulled back far enough for me to get involved. Higher up, the 100 level is still there. I don't know how relevant that is today, but I thought I would mention it. And then to the downside, 80 arises as the next kind of bigger anchor point. So again, if this all starts falling down, at some point of the day, maybe if I can find a good setup to the short side and this one doesn't work out, I might look to trade, like, I don't know, maybe a reversal from VWAP and into 80. It's still going to be a bigger trade. But yeah, until then, I'm just going to stick with this one. I never really freak out in any kind of drawdowns or anything. Hypothesis is that 50% of the range generally turns around, and if it doesn't, it bloody doesn't. It's like, so what? It's only one trade, and if your risk is controlled, and if you are just, you know, staying sane and not really freaking out in your trades, you shouldn't really care. You really shouldn't care. Like, to care less. That's the motto. Don't attach so much emotional involvement to the P&L and ticks, right? It's not healthy. All right, let's have a look at silver as well, because I know a lot of you look at... oh, I talked about silver already, man. Why are you confusing me? Ayo says, talk about silver. I did. We went through gold, silver, earlier in the stream, so please rewind. Otherwise, I'm going to be repeating myself here. We did the silver, yeah. Leor says, I don't think that Iran and Israel and us will negotiate. I mean, they'll negotiate. Whether they're going to reach any sort of an agreement, that's an entirely different can of worms there. They'll negotiate. They'll sit down. But, you know, last time they tried that, Iran just went, this is unreasonable, and they just all walked out. So, yeah, so that's how that ended. And that brought us a massive move up. So, I don't know. A headline risk means that anything can happen at any moment. And... you know, this is why smaller size, wider stops, giving things room to breathe. That's, you know, it's not to say you can't make money. You can absolutely make a ton of cash on tiny little positions, but only if you shoot for these bigger swing levels and not looking at like granular and then going, oh, I'm just going to take 10 ticks out of a crude oil and a 3 micro. It's like, well, that's not really that productive, is it? So from my perspective, I always, and anytime we have things flying around, I always size way down, use mostly prop for that purpose while still maintaining the end of day trades in my own account. I really don't do too many options during headline risk because it's it's headline risk. So, you might be in a short call of some sort and they say something terrible, and then suddenly you are basically sitting in a crazy amount of loss. So you have to be very careful. So for my options trading, I want to wait until they are further down in this conflict and things are a little less risky. So yeah. And I do use options as not as a protection from any particular events. I do use them as a vehicle for income. So it's a different goal. Brishti says, look at silver again, please. All right, I'm looking at it. So we had, all right. I'll look at silver. People are asking. Here we go. Silver, right? Silver, same reaction to the late news. I don't know what it was. I didn't look. But yeah, brought a follow through during Asia, settled around my 1:32 a.m. GMT, reversed, and pretty much stayed within the Asia range, so it's not really doing anything at the moment, and hitting VWAP very flat. Couple of points that I'm looking at is 75, that's a moderate put wall. Then you have a couple bigger put walls at 70 and 69 where the value areas are as well, and then you have a massive gamma wall up at 80 level. This 82 is an old one, so I'm just going to remove that. So yeah, that's your silver, right? ADRs, I thought I had them on there, but they seem to have disappeared. ADRs are very wide. I'm not sure that's something super useful because the ADR low is a 68.20. ADR high is all the way up to 78.65. So that's not far away. But yeah, my first area of interest for silver would be what do we do around 75 or 70. Don't really want to be inside this whole area. If you look at it structurally, you could say that this was a pretty clean rise and that because of that you could have a very smooth drop. But again, that brings us to maybe doing a short intraday and then going into maybe some kind of a sustained auction trade or maybe a failed auction to the upside. So the upside auction fails, then rotates. That could be an option, but for now it's all very, very quiet, and I would hypothesize that this is now a range that we see a lot during these hours. So I'm just going to wait until maybe closer to the euro close and then see what they are doing at that point. All right, so crude oil still being relentless in the short side, which is a little annoying. It's a little annoying, but it's fine. Let's see what crude oil does around the IB low. If it rotates into a neutral day, that's actually an odd thing for this time of day, so it will be outside the stats. Again, probably headline risk. Bringing in some outliers. China's Premier Li is talking, or was talking. But yeah, for all intents and purposes, we're still in the weird period of pre-NYMEX. And usually if I'm going to do anything on the short side on crude oil, it's going to be a short failed auction, which I've done already. But then it will also be a big sort of upside move, and then me shorting it towards the NYMEX open, and then just sitting on my hands for a bit. So yeah, same times of day for me. So crude oil, after this trade is over, I'm not even going to look at it until 4 p.m. my time. That is half an hour before the London close. That is my next day trading time zone. Anything that happens in between, I might observe, but I'm not really looking to do anything with it. Now, there is a chance that this goes all the way down to 85 and then bounces. It will still be that neutral day type. But I don't really have that as a potential at the moment. Neutral day is already here though, because we've just punched to the opposite side of the initial balance. But again, I'm not aiming to do one trade, then another trade, then another trade. Whatever happens with this, and the good way to look at it is like if you were asleep and you were running this trade. Would you be extra managing it? Would you exit it and then re-enter? Or would you just deem that 87 is sort of it's my rotational zone? So it's basically this whole thing that I'm looking at. Here we go. IDF, I don't know what that is. Attacked Iran Navy site for developing submarines. News. Headline news. Here it starts. Here it begins. So again, is that positive? I don't think so. But some people might see it as positive. It's like, we're winning the war. As Trump stated yesterday in his, whatever that, was it a testimony or something like that? Yeah. So he was making some big claims, so, whatever. But then the market didn't really react to it. They were just like, yeah, whatever. But yeah, this is the zone that I'm looking at. So it's this ultimate low after this big smash. That's what I'm using as a rough guide. Rough guide. Like a doggo. So yeah, we'll see what they want to do here. I don't think, we're in a situation where we can have just a clean, massive drop again. But it can be proven wrong. Again, all it takes is one headline that receives a lot of focus. Need to let the Cavalier out because he is deaf, and he actually had an episode last night of syncope. That's not great, but it turned out it was his low blood pressure. So, anyways, be back in like 5 seconds. So yeah, last night, 2 a.m. I'm trying to do a trade during Asia, half asleep as usual, and he gets up and starts wobbling around, and I'm like, oh god, is he dying? Is this it? And then I couldn't sleep for like 2 hours after that. So it turned out that he had syncope caused by low blood pressure, which could be a good thing because that means the meds are working. But yeah, it really freaked me out. And I know it's coming. He's old. I get it. But it's just like, it's never going to be less dramatic for me. Alright, so far we have some buyers that have appeared right after we pierced to the downside. Some sweeps have been popped. Now we're going to see where they want to take this. Is it going to be all the way into another single print down? Or are we just going to fake everybody out and then smash it back higher? We shall see. But yeah, a little bit of a bid off the low there. How serious? We need to see the price going over 87, because 87 was sort of an orientation point. And it was a level yesterday as well. I was looking at the dome on the main contract, and that one, so it was 89, 87, and then 85 that had like a massive amount of contracts. When I say massive, it's not the same massive as it is in ES. So we would be looking at maybe like 500, 1,000 in ES. In crude oil, it's like over 100. So that I deem as a pretty good thing. But you can't do that on micros. Micros are not true representations of the institutional activity because it's a derivative contract and mainly a retail instrument. So what I like to do, I always have my big contract, which I trade in my personal, on one side. So that's what the dome is based on and everything. So let's scan through it actually. This could be a nice little exercise. So switch off the auto center on last price. And when you do that, it also, like when you're looking at the price, it can give you a little bit of a better clue of how the price is moving. But I don't know, you can kind of see that when you're looking at the candle too. So to me, that's not too much of a strength. So if you can see 86 has like 72 contracts, to me that's not quite enough. So I go looking to see where the bigger contracts are. 79 at 85, again, not quite big enough. So to the downside, we don't have all that much, so let's scan to the upside. See whether anything else comes up there. Nothing at 89 today, only 27 contracts, that's peanuts. Nothing at 90 either. Interesting. That's a gamma wall, but if it's not of institutional interest, then we go higher. 91, let's see, yeah, 91.50 for now, no interest. All right, so 92 is where currently we have somebody sitting there and waiting, like our Bob, the chameleon, the friend over there, over my shoulder, always looking out. 106 contracts at 92. That could be something to reduce my target. Maybe they don't get to 92, they get to 92.50, they get to 92 and they reverse it, but depends. And then further up, 93 is at 97. Nothing at 92.50 at the moment, but there was nothing there yesterday either. 27 contracts. So yeah. So people are waiting for some bigger shorts back up around 92. That's kind of how I would read that. But yeah, don't use micros for dome readouts. That's not particularly useful. Right, so seeing that bid continuing now in crude oil, still below 87, so we still need to see some initiation above 87. We might need to wait for that until we get closer to NYMEX, right? So that pre-market NYMEX an hour before, that's when it really starts happening. And I'm kind of looking forward to going back to the old time because it's all a bit weird with the daylight savings nonsense. So I've only got like tomorrow and Friday to live through with the weirdness, and then we can be back. Because look, what happens to me around about March time, which is why I stay on like risk-free accounts during that time, is to basically be very, first of all, I'm a bit scatterbrained, so I keep forgetting, like for the first 2 weeks, I keep forgetting what time I should be trading. And then it's really confusing and it throws off my entire day, right? So I usually walk my dogs between sort of 1 and 2 p.m. or 1 and 3 p.m. And then after that, I typically try to sit down and observe. But what happens now, already at 2 p.m., that is the time when I should be looking at the markets, but I'm on a dog walk. So I'm like, I come back and I'm like, oh, okay, so that extended, of course, it extended the initial balance when I wasn't looking. Then the second thing that happens is that you have the Euro close happening at my 4:30 p.m., but then my day range fill, which is the next time zone that I look at for crude oil specifically, already comes at 5. So there's none of that. And then the London close is kind of happening during New York lunchtime. So it's like the signals get a little bit smushy, right? So probabilities get all like skewed. And I absolutely hate what it does to me. So I will be welcoming the clock change on Sunday. And we're changing on Sunday, by the way, if you're in the States. That means the Euro close is going to be happening as usual at 10:30 a.m. Central, rather than now, which is 11:30 Central. And I'm sure it's weird for you guys as well. You know, London starts earlier, and you're like, what, why? Sorry, London starts later, it closes later. I've had people sending me messages in the portal going, all right, so it's half an hour before London closes, and I'm like, no, there's still an hour. And they're like, oh yeah, right. Oh no, I did a trade. And the problem with that is that your probabilities change completely from, the time of day that you're looking at, especially on commodities. Maybe not so much on equities, even though they kind of have a similar thing. But, you have these like zones during the day when the probabilities of something happening are super high. But then you move that an hour out, either before or after, and the probabilities are completely different. It's a completely different setup. So, that's a huge part of my analysis, like which time of day. That's why I always say time of day is a level, right? And I'll be honest, London is always a bit weird because it doesn't have that. It's not like, oh yeah, well at this time of day, this is when they start. No, what you have in the latter part of the London session, you have the pre-market, which causes a whole bunch of weirdness. And if you look at the probabilities of how the events transpire within a systematic framework, you find the probabilities are like 50-50 at best. So what I go off of is what happens more, like what maximum favorable, what kind of excursion you have that's better, even though it's a 50-50 coin flip effectively. So that's why it's like, you can't really look at it in the same way. Like the New York session has a very particular behavior to it, and then London is all over the place. You do have a couple of things that happen very early, and it's usually the metals that take out the Asia high or low, the Tokyo high or low, and then they reverse. But a lot of the times that will be more a function of the Shanghai exchange and the last hour of take profit. And then especially in metals, you get this like super range that like does very little. And it's, you know, on gold in particular, it's super volatile at the moment, but it's still like, technically it's still a range, right? It's a range of like a million ticks. That's why I said you can still find opportunities there, because you're looking at ranges of 700 ticks, and there they are. So it's still a range, right? That's not to say there's no opportunities, just size way down. You know, if you can run 1 micro on gold for like, you know, 700 ticks, that's $700. I mean, that's, you know, decent amount of cash, and yet you're in on 1 micro. It's like perfect. It's great. All right, let's, do we have more news? Oh, joy. No, this is just the Europe market wrap. Okay, oil drops from Trump's peace push as stocks rise. Yeah. What else is new? So there's nothing really apart from this attacked Iran Navy site for developing submarines. Maybe that's... But it's not even marked in red, so I don't know how to read that. Is that good? Is it good because we're like winning? Or is it bad because they're still attacking them? I don't know. You know, how do we figure that out? Oh no, more rain. That's great. What time zone am I in? GMT, so England. I'm in the south of England, in beautiful countryside. Poor dogs, man. I said the 4 of them go to doggy school on Wednesdays and 4 of them go on Mondays. And it's been like pretty decent weather, but today it's absolutely miserable again. So someone's also saying, for me, it's also suspicious that Trump talked about negotiation exactly when NASDAQ hit weekly low. Listen, there are no no coincidences. I've watched these markets for almost 20 years. It always happens when you're hitting some incredibly important points that one of the government officials says something that's going to completely turn things around. And it's like, I think it's basically the function of market makers, because if you look at how the news events happen, they will always be sitting at areas of potential inventory adjustments, right? So in that regard, I'm a bit of a conspiracy theorist. Please get me a tinfoil hat now. I don't have one. Maybe that's the next silly hat that I should be wearing. But yeah, tinfoil hat moment. I do think that there's something to be said with the way those events always happen in and around these important inflection points. It's like, I did think we were born yesterday. Yeah. That's the only conspiracy theory that I subscribe to. That after watching the markets for 20 years, there's always a big level that everybody has their eyes on, and then they're like, yeah, this is what we're doing, and then smash or reverse. Usually it's a big reversal. Right, something's happening here. So they are... See, when this velocity intra-candle, this is what Dolby calls the wiggle, but it's just like, it's the amount of volume starting to trickle in, and the flurry of activity is what I like to call it, but he calls it the wiggle, which is quite funny. It's like you have the market wiggling its bottom, wiggling the bum at you, and going, come and take me, and yet you fall for it. So it's like, don't fall for it. Let's just see. I still have my original trade. I'm not exiting this. I'm just going to sit and wait. So I'm going to be a stubborn little D over here, because that's what I am. Once I have a trade idea, I don't care what else is happening. I'm just like, you know what? I'm sticking with this. And that's kind of a good and a bad thing, I suppose. There are times when I exit early. You know, if I've been in profit for like 200 ticks and then all of a sudden in the next 30 minutes, it pulls all the way back and now we're at my entry, I'm like, yes, this could be wrong, because that's a big move, right, in the opposite direction. But yeah. Not seeing anything on the news. I literally have my eye on financial juice. But I just have like the summary, so... And, at the moment I'm not paying for any kind of fast services. I'm actually looking at something called Trade Vision. So I might have to reach out to them to see what sort of an offering they have. Because if somebody can have like a new service that is not costing an arm and a leg, and yet they don't have a delay, I wouldn't mind paying a little bit for it. I just don't want to pay thousands of dollars for it. That's, already paid thousands of dollars for an API access. I don't need any more of that. That's not on Topstep, by the way. It's a different company. Topstep API is super affordable, like super affordable. One of the reasons why I moved away from that is because I inadvertently always end up in live accounts pretty quickly, and at the moment their API keys are not enabled for live, so I can only trade them in XFAs, and to be honest it's a bit pointless, because whenever I'm running algorithms only and I'm not like trying to do manual trading myself, I feel that my trading chops just completely go away, and I'm a lot less present, I suppose. I'm like, yeah, that's the setup. Just click there and it's going to do it for you. Whereas if you're doing it as a human, like you have to look at a number of different things and then just decide whether this is still something where you want to click a button rather than letting a computer do it for you. So I guess I've, I just decided that it's not, unless they enable it for live accounts. Maybe I'll go back to that project at some point, but at the moment it's not worth a lot to me. Yeah, Sonny says, he always starts wars on a Saturday, doesn't he just? Yeah, I noticed that too. Always makes huge announcements over the weekend. You're like opening with a huge gap, and people are like, oh my god, I thought that everything was fine. And then, is it intentional? Probably. Maybe. But I mean, he doesn't care, does he? Because he makes announcements during the day as well. Like he made that announcement of a huge drop, this one that he's negotiating, and that it will all be over in 5 days, right? That was 11 a.m. my time. That's like pretty early. I get that he was traveling and answering questions in front of Air Force One, but it's like, dude, just give us a bloody chance, man. Like, what are you doing? Can we get over 87? Can we get over 87? What's the time? All right, 11:33. That's fine. See, it never even. So we're not even opening the LME yet. So that's happening in 10 minutes time. So yeah, again, a little bit too early, but yeah. See what the metals do as well. So for now, there's not a crazy amount of movement, right? So this is a little bit more lively on gold. I'm just going to check the correlation between these two, because now see, the correlation is slightly breaking down here between gold and crude. Yeah, hold it until the cows come home. Absolutely. And then one of my market stalkers also said, so the hat was for milking the markets. That too. We can do that too. But yeah, so my bigger trades are all about staying convicted in your analysis, using wider stops if you are planning a trade like that. I'm only planning this because and you saw I already did a little intraday failed auction against that, purely because that was a high probability trade as well. This one is more 50-50, right? It's like, yeah, it might happen, but the mean reversion at this time and then a subsequent continuation in the first direction of extension of IB, that's the higher probability excursion, which means it has more legs. That's the only reason why I'm taking it. Otherwise, it doesn't have, like, it's not like, oh yeah, 100% of the time it does this. Most of the time, it will be a bit of a, complete nightmare to figure out. And every day it will kind of change. There's no discernible solid pattern, solid framework. So you just have to go off the excursion. And so I'm going off the daily level where we are. and looking for the daily move. Someone asked in chat, do I trade ES? I very rarely. So when I was first starting in prop, I actually worked on an equities desk. Didn't like it because ES was moving like 20 ticks a day. That was the average range. And I just couldn't figure out for the life of me why people were trading that. And they also tried putting me on the fixed income desk to kind of do some spreading and stuff. Absolutely hated that. I was like, what do you mean I went to lunch for an hour and I come back and it's moved 3 ticks? Like, I can't live like that. I know that Jack did it for a long time. But to me, it just kills my soul, man. I am against, like, super high volatility, so I don't like things that are moving 3,000 ticks a day. But I really don't like something that doesn't move at least 180 ticks. So that's just me, my sweet spot. James Doyle, yeah, Financial Juice is what I've got as well. I used to have Rand Squawk in the UK, and then one day I went to have a coffee around the corner from our office with a friend of mine, a colleague. So we're sitting there, and then a guy walks in, and they know each other, and he sits down, and it's the guy from Rand Squawk Radio, like same voice that I was with. And I was like, dude, and I said to him, you sound exactly like the guy of Rand Squawk. And he goes, no, yeah, that's me. It's like, oh, sorry, okay. Long CL during a ceasefire? No, during a ceasefire would be short. Yeah? But there's no ceasefire yet. So ceasefire, so it's topsy-turvy. Why? Because if there's something kicking off in the Middle East, that negatively impacts the crude oil supply. So Strait of Hormuz, for example, is now possibly littered with mines, and there's issues with actually transporting all these goods through there, right? That is something that kicks crude oil to high heavens, because there's transport issues, there's supply issues, and the whole world will suffer. And we will actually be suffering from these prices for a long time after all of this is wrapped up, right? So it's not trivial at all. This is going to have huge knock-on impact on the rest of the economy, on the world economy as well. Huge disruptions. So anything that is putting the jeopardy of crude oil production in the Middle East, that is bullish on crude. Ceasefire means that they are negotiating and they are kind of going, all right, let's see if we can go back to normal thing and we can, find some common ground. That is bearish for crude oil, okay? Why? Because everything's fine and we're negotiating and the transport is starting again. It's all blah, blah, blah. So crude oil gets cheaper, okay? That's the macro side of things. Very simple. Not going to go too deep into it. Yeah, so MM Kate says, Iranian government says there is not any negotiation. They say maybe Trump is talking with himself. Is that really true? That's so funny. That's so funny. Akeem, I just saw you. Zag is silver. We trade futures here. Deeyana, why do you trade metals so much? I am a commodities trader. Why do you trade NQ so much? Same question. And I'm just going to guess. Imagine nobody else asks you that, right? So you go and watch all of these people, like millions of YouTubers. Maybe not millions, but let's say quite a lot of YouTubers only trade NQ. They have never looked at another product in their lives, right? Never, ever. And then you come to this stream where we're talking metals, energies markets, general economy, gamma levels, and you're like, D, why do you trade metals so much? Like, what kind of a nothing question is that? This is, yeah. So I don't know what you mean by that. So why do you trade whatever you trade so much? Why are you so in love with NQ, mate? Genius K says, oh my god, you in fixed income. Exactly. Why is my YouTube buffering? I don't know. Are we still streaming? I think we're still streaming. Alright, we've got 20 minutes to hang out together. Copper looks like it's forming a bottom. I don't know. So this tight range of copper during Asia is not it means wait, right? Because the range is just not good enough to define the day's range on most days. So I'm expecting that they're going to break out of that. So one way that could transpire on copper is that we break the Tokyo high, go into gamma wall. If we're not able to break the gamma wall and it reverses, you may have a smaller trade back through that range. And, it's 150 ticks. It's not to be sniffed at, right? But it's not the biggest range either, but it's usable. But really, if you're going to be looking at, some bigger movement towards the next pain point of 590, let's say we're talking, maybe a little swingy swing with the day's developments. Because on the daily, there is that consolidation, if you remember from earlier. Consolidation, there it is. So I would be more inclined to think that if we do go above 560, that we are going to start tackling this single print and actually pulling through it with a reasonable, look, copper is not super quick. Copper is actually a very calm product. So if that starts happening, I will be immediately thinking, all right, the daily accumulation is probably done. Now they're pushing. So we're pushing into markup. If you're going to use Wyckoff. Reversal, whatever. So the next stopping point would be at the very least 577. And, in that respect, if that starts happening, maybe I run a swing overnight on my own account. But obviously not on Topstep because you have to be flat at the end of the day. So I have to find a way. The challenge is to finding an intraday setup that will still allow you to make a reasonable amount of cash intraday, but one that will finish in due time. There's that always time constraint, right, with the futures trading. And that if you can solve that, then you're great. And that's why I've got all of my fancy little tools, right? I've got the TPO profile, I've got the Tokyo high and low, got the initial balance high low for each session that comes along, and I have setups relating to each of that. Even though they're always the same setups, but you have a different initial balance reference, if that makes sense. And then also probabilities attached to the time of day when that setup is the highest for that product. And then I have the average ranges, just so that I'm aware of where we potentially stopping and where I shouldn't be going for full port through ADR high, unless it's an outlier day. And we're already through the ADR high. So, let's say that overnight we had a massive Asia move and we're now sitting at 72 during London. That would make me think, okay, maybe a continuation. Maybe this is that, single direction day that brings, quite a few ticks into consideration. Maybe it's going to keep going to 590. Maybe. But yeah. For now, the way I would play this, I would like to have a test of a gamma flip maybe. So 550, Tokyo low. And then maybe some kind of a reversal, maybe a failed auction long on copper. And then to run it all the way to the other side. That would be with the accumulation direction. So hypothesizing that the accumulation will eventually bring buyers into the mix. And we also have the supply from increase from China, right? So Chinese have started buying copper again. So, all of that. But I'll be honest, I prefer to trade metals either during Asia or during end of day. Recently I've really been disliking the New York session. It's just so full of headline and it's like up and down. And even though the levels still work, by the time that the moves happen, you're not able to catch them, right? Because it's all like, done, we're to the next level. And then you're like, damn it, like I sat here forever and I went to get a coffee and I missed the move. It's like, come on. And this is why I'm doing these like bigger view trades so that doesn't happen, and yet headline risk causes that magical moment of somehow levels working out and headline risks coming out just around the times that we're hitting important inflection points. So my approach during these times is look at the larger time frame, 4-hour daily, figure out whether you're at a swing extreme of some sort and whether you have something that you can lean on directionally that's going on the daily that's pretty obvious, like consolidation of copper, for example. And then just run the intraday trade on super low size, aiming for a big move. That's usually worked for me. really well during times of high volatility. I used that during tariffs. That got me my second live account, and it's worked for me exceptionally well during COVID, 2 years of COVID, and that was crazy. But yeah, so there's ways to be involved, but unfortunately, if you're not in a position when headlines are coming out, very difficult to find something to do after. Because, if you look at how, like, for example, crude oil behaves, every time these big things happen, so you have, and this is also why I say to you guys, don't get involved if you're not already in and you see a massive candle. So this is a 30-minute time frame. I always have it up. I always reference it. Why? Because you have smash, and then people are going, right, the war is over, let's go short. And then this candle jumps 322 ticks. So however you were trying to catch this short move, unless you were already short, there's just no way. There's no way. But you had some clues, right? So we had that 100 level that was struggling. Maybe I could have run a big short, like I'm running this big wide long on, a million ticks of stop, 164 to be exact. Maybe I could have suffered through some of this drawdown, right? And then caught the majority of this. Because my actual orientation point on that day was this 85 level. So that's very interesting, right? That they bounced it straight off of that. And that's your inventory adjustment from the institutions. That's where the technical side, post headlines, comes in. And then for the rest of the day, we didn't have anything near that kind of a news. And all of us were like, right, where's the next piece of news? And it never came. Never came that day. Just the boring ass session that you can ever imagine. And then slightly smaller in magnitude, but here's that right after the market close smash. So luckily, like I said, I kept that open, because in my private I actually like to keep trades open all the way nearly to the end, like the last minute, and it worked out. Like I was actually helping my husband feed all the doggos. All right, so here we go. We're getting some movement here. And I came back and I was like, that hit target. Whoa, what? Like I thought my target was like really far away, and it was 87. And I was like, well, how? What? And then I was like, that's headline risk. Okay, cool. But a little bit of a pain that I only managed to take. I don't know whether I took 100 ticks from this. So it was, so it was around 100 ticks. That was the trade. And because I was still using a wider stop, that ended up being a negative R trade. But I ran out of time, right? It's like, well, we're at the end of the day anyways. We're touching VWAP. We're not breaking through it. Let's just book, right? But on my private, I was like, maybe there should be a swing. We're at a pain point. We have these single prints here. We're going to have the, because there's a big single print left here. And that was the trade idea, right? That the day range fill is going to give us the reversal, and then eventually we're going to get this movement. Did I think it's going to come right after the close? No, absolutely not. But it's like, okay, well, headline risk. But hey, happy I held that trade. I'm not so happy that I couldn't do it on prop, but it's the name of the game. That's why you've got different accounts, right? With different different things. So it's a form of risk diversification, I suppose. Was there news? I don't know, man. There's always news. Yeah, ECB, Pereira. We're ready to respond to any situation. I don't know what he's talking about. Is it the Cyprus thing? I don't know. It's such an offshoot comment. It's like, we are ready. Like, imagine me coming over and saying, I am ready to respond to any situation. cool story, bro. It's like, what situation? Like, where is it coming from? What are you talking? Is it the Iran situation? Is it the Cyprus situation? Like, come on, Financial Juice, do better, man. What are we talking about? So, yeah, so I'm just looking at this sort of like Euro market wrap. The drop in oil prices encouraged traders to reduce their expectation for tighter monetary policy from central banks. Swaps currently pricing less than 1.5. Yeah, whatever. Nobody cares about that. ECB's President Lagarde also pushed back on expectations of an immediate response to rising energy costs, stating that the ECB could deal with a limited short-term stock. Yeah, I think short-term stock is the thing. And then ECB's Pereira comes out and goes, we're ready to respond to any situation. It's like the situation on rising energy costs, the situation in Cyprus that was attacked by a bomb, like there was a British base, they got bombed there or something. Is that the situation you're talking about, or is it the situation like in general? It's like, what? If anyone has any information on what the hell they're talking about, then please let me know. Right, so AKA says, saying they have no problem to cut, hold, or hike. Right, so they're talking about monetary policy, right? Okay, well, thank you. Thank you, that's good to know. But yeah, what a vague statement, man. Enrique says, I've recently found a little bit of success trading mean reversals on range days and anchored VWAP bounce on trend days. It's pretty straightforward. Yeah, no, absolutely. That is actually something similar that I do. So we use, the market stalkers use VWAP on range days, session VWAP, so in the middle of the range, even though some of my market stalkers prefer the POC, point of control. But we want to also see a clear range, and ideally, like in the ideal situation, to also see the neutral day type. So initial balance extending to both sides, effectively. And then you're using session highs and lows to kind of snipe, kind of like Dolby does things, but on a slightly larger time frame. So that's what we do. And you're absolutely right. The range days require timing and precision. You can't trade it from a 30-minute chart, that's for sure. But if I'm expecting a swing and I'm seeing a range that is not necessarily anywhere close to, you know, the third or even half of the day's range, to me that's more like, yeah, we're getting ready for a mean reversion. Now my mean reversions usually come as a result of enforced hedging into settlement of some sort. That's when the probabilities of that particular playbook is the strongest, right? But I'm a core mean reversion trader, right? So for example, if you look at copper and I want to run along at some point, how would you classify my idea of longs here? It's a mean reversion, right? Why? Because we went all the way down, then consolidated, and now there's a potential for this to stop pushing through. It's a mean reversion. But on intraday, you can't just use that. So in my opinion, on copper, this is looking more like it's going to turn into some sort of a sustained auction than like a mean reversion using a range of some sort, and then you kind of getting involved at the edge of that range and then shooting for the middle. So I am expecting that at some point they're going to start pushing. They've been pretty strong in volume whenever they pushed higher. And, you know, it's a combination of headline risk, combination of this Chinese increased supply, when buying copper, Chinese increased buying copper, which is effectively increasing demand for copper, rising prices follow, right? Okay, so VWAP causing a bit of a trouble here. I will say that crude oil, while VWAP can be relevant on more trend type days, it's not normally that good of a decision maker on pre-market and stuff, because you get these the expansion of the range and the volatility massively kicks up during pre-market NYMEX. So I don't think that VWAP touch and reversal is going to be anything that's going to stop this if it really starts rising. But we're finally getting that sort of an indication. You know how I said that usually the first extension of the initial balance is the one that gives way to a bigger trend, and this is something that happens just on the up days, so on the extension that happens to the upside first. If it extends downside, that's a whole different matter. But whenever crude oil has extended upside first during this time of day, even if it sort of rotates and messes around the initial balance, ultimately NYMEX pushes it in the direction of the initial extension. Does that make sense? And I find it endlessly interesting. And the fact that we're hitting a daily demand, it's not a bad setup. Not a bad setup. So basically now the first step would be, I said the first step was actually 87. So we're above that. We're done with that part of the ODA loop. The next step would be strength above VWAP. So we would need to see some commitment eventually stepping in. Then ideally I would like to see the initial balance single print up to the gamma wall. Some drama around this area for a couple of reasons. A, it's the gamma call wall. B, we have some single prints here. So this could be the stopping point, but at the moment I'm not seeing anything on the dome that would lead to that. If we break through that, gamma wall could become another bounce point. So maybe going above it, maybe bouncing from it. As NYMEX develops, we will also have new orientation points. So we will have the NYMEX initial balance. So you can use MGI for even further information. And then if we tackle that, London average session range high is one area. And I might just take it at 92. I don't know whether I'm going to keep it all the way to 92.50. If there's headline risk that comes in and that's bullish for crude oil, then this target is not going to be a problem. But yeah, so we'll see what happens. It's interesting. It's definitely an interesting day. Alright, that is all. Is that the May contract? No, this is the April contract. So crude oil is a monthly rolling contract. So every month it rolls without a failure. Annoying, but you generally get about 3 weeks of good price action. And then the rollover starts again. Lovely. Some of the other products, obviously equities, they don't do that. They're quarterly contracts. And similarly to gold, even though gold is also a monthly contract, its rollover is more to do with the requirements of the users and producers of it. So, for example, if you're like in July or something, they will just immediately roll to December, skipping over October. And people are like, but why? Well, it's because it's Christmas, right? So they know that they will need a lot of gold and silver and platinum because it's like gifting time, and it's a high demand for precious metals traditionally. So that's why they roll immediately, like skipping over quite a few contracts. But crude oil, no, it's like every single month we roll. I'm one of the only traders that likes the dome locked. I just do that for your benefit, guys. I have another dome on Bookmap, which is here. So that's what I look at. Okay. And that one's not locked. That one just moves. But yeah, Bookmap is a tool that I use to read order flow. I can't do time and sales. I have to have it visually presented to me like I'm a 3-year-old. And it's just how it is. But yeah, it's always up on my other screen, so I can see the non-auto. But this is just literally for your benefit. I very rarely look at. Topstep X for me is more of an execution platform. I have my own charting packages and stuff, and then I just put levels for you because they don't do third-party indicators. Otherwise, I would probably make some indicators for Topstep and be done with it. New headline. Some were saying, yeah. New headline is French finance minister reaffirms that the energy market situation in France is not as serious as in some other European countries. Great, good to hear. Do they have like Russian gas? That was mean. All right, we're gonna finish it up here. Make way for the daytime show. I am probably gonna be on group coaching tonight, so that's 5 p.m. my time, 12 p.m. Central. So I will see you once again. In the meantime, I'm gonna allow this trade to do what it needs to do. So that's all from me. Thank you so much for sharing your morning with me. I really, really appreciate it. Click like, click subscribe. Obviously, you're probably subscribed already, but give me some love. Give me some love on that like button if you're finding any value that I'm sharing here. All right, my friends, that was it. I'm Market Stalker D. This was the Metal Markets, and I will see you in a little while. Take care.